What's going on, traders? Hope everybody's having a great weekend. Wanted to go ahead and make a new updated video here on the E-mini S&P futures as well as the NQ Nasdaq 100. We'll look at the economic calendar, of course, for this week, some earnings as well to pay attention to, and of course, we'll go over the charts on a higher time frame and the lower time frames as well to get some day trading levels on our radar for this upcoming week. Reminder though, before we start to get into anything, that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, so let's start off here and take a look at the economic calendar for this week and see what we have in store. All right, Monday, November 4th. Pretty quiet. Tuesday, really nothing going on. ISM services at 10 o'clock. Wednesday, 9:45. Final services PMI, not really, again, something I'm too concerned with. But the main event of the week, of course, is going to be Thursday, November 7th. We've got initial jobless claims at 8:30. And then the Fed. All right, we're going to see what they're going to do. Are they going to drop rates again or hold steady? That is at 2 o'clock. So FOMC at 2 o'clock. And of course, we have Powell's press conference at 2:30. So really, that's the main thing I think everybody, of course, is going to be watching for this week. So all eyes on Thursday. Let's also remember, though, as we get closer to FOMC, we could see some hesitation in the markets, a little bit choppier price action. Don't really be looking for, a particular trend day ahead of FOMC. Besides, we just got one last week. So let's just be a little bit cautious, of course, coming into any major economic event. All right, now let's take a look here at what we have in store on the earnings front. Of course, last week was a big one with Google, and we had Microsoft, Meta all behind us here. And what do we have this week? All right, any big names really want to pay attention to? Let's see. Well, PLTR after the close on Monday. Definitely going to pay attention to that because I know it is certainly a kind of a cult stock, not really something that will move the market, but it'll be fun to watch either way. Same thing with Celsius, although quite beaten down as of late. Wednesday before the open there. And after the close on Wednesday, a couple of interesting names. ARM will pay attention to, and Qualcomm kind of in that semiconductor space. Other than that, really just all seeming smaller names here. We have DraftKings, SQ on Thursday after the close, Affirm, Pinterest, Airbnb all after the close, but nothing really that's going to move the market too much. And of course, we do have Amazon and Apple behind us as well. So we're getting through the thick of it. Of course, the last darling to report is going to be NVIDIA, but we have a little bit of time for that. So just a couple of fun little cult names here, mostly B and C stock names overall. So nothing really that's going to move the market significantly. So that is good. All right, so let's get into some charts here. We're going to start off with the E-mini S&P futures, start off with the blank chart, just see where we are as far as the trend and what this weekly candle has shaped up to look like. Well, without a doubt, if you had traded middle of the week, we had a huge down day on Thursday, and you can really see that, of course, reflected here in the candle. Taking out, what is this? Basically, 1-2 weeks, we've basically taken out the last 2 or 3 weeks in price action here, and we're basically matching the lows, right? We're matching the lows from the week of the, the 30th of September and October 7th. So we're definitely going to pay attention. We got to watch. I mean, they're going to give us really that equal low is around that 57.25, but you can really say certainly if we get under that, we probably would gun for that 5,700. But I'm going to still just really say that that's really the main area that the bulls are going to need to defend. Just that nice whole number right there. But certainly getting under the highs from the week of July 15th is going to be problematic. So we'll have to see. Certainly, if we get a weekly close under that level, we would probably start to look and talk about the potentiality for this little gap to get filled here. I am having some issues with my mouse, so I just want to let you guys know that ahead of time, because as I see here, I'm trying to create a level and it is not working. So I'm gonna have to probably do this a different way, and it might make things a little bit slower, so bear with me. All right, here, so this is really that zone, and overall, and of course we're on the weekly chart here, so it's going to be a little bit wider. Of course, we were just talking about that 5,700, but really from that weekly perspective, if we're talking about some demand liquidity, it's going to be all the way down to 5,680 thereabout, right? Look at the highs, the weekly highs from the September 2nd, the 26th, and they're a little bit lower, but the week of August 19th. So just in that general area, I think is very important here to pay attention to. This is what we're going to have to hold if we really want to remain bullish. And if we start to break under, well then, like I said, we'll look at the contract gap, and we'll also take a look about potentially coming into the weekly 20 period moving average right here. And of course, as time progresses, this is probably going to, start to, oh, I can't even do that, start to drift up slightly. And why is this not letting me? Oh, here we go. Probably start to do this and come up like so. And then if we do see the price come down here, could have some nice confluence coming right into that area along with the 20. And then we just rip up and rally like so. So that is certainly a potential buying opportunity that I will be paying attention to coming into the end of the year. I think, I've made it no doubt that I'm looking probably again for that 6,000 into the end of the year. It's really not that far away. It's 50 points away. So, we really could even see 6,050, something like that. Certainly if we start to get some weekly closes up over these swing highs. So I still think that's in the works. And even if we do pull down to 56.30, right in this right where the 20 is right now, again, it's probably going to drift up. But even if we do pull into that, again, the trend is going to still be there. Overall, we have to watch out for, something like this to potentially happen. I mean, that would be a little bit hard to stomach, very tricky there. But if something like this happens, certainly you get out of the trade. But then what happened, right? The next following week, we had the candle back above and kind of reaffirmed an entry there for us. Now, obviously, looking at the week, it was a very interesting couple of weeks here, coming back to test the 20 again, but that's how it goes. Overall, the trend did continue in your favor. So we're going to take a look and see what they're going to do this week. Of course, with the FOMC, so many things can happen, and it's really hard to predict how the market is going to see and react to whatever Jerome Powell says. So I'm going to be very, keeping it very cautious up into that big event. All right, so I think that's a little bit better of a view here for you guys to keep an eye on. Right, but certainly a big candle to the downside. And we did close marginally. It was, a little unconvincing to me. Weekly 9 sitting at 57, 58 half basically. So we'll see what they want to do. Normally, of course, I probably, all things being equal, now we do have the FOMC, it's never just that easy, but when we do have these big range candles, what do we usually always look for? Probably about that 25% retracement, right? That's going to be the most bearish thing, but we do look for that push back up in the other direction, and then we have the 50% retracement as well. We're going to definitely look at the lows. I think that, if the bulls are, matter of fact, able to get back over, oh, look at that lining up, right? The weekly low of the 21st, basically right at 5,800. So I think that, and of course that being that whole number, a very key area, pretty much the weekly high of September 16th as well. So that's going to be important to see whether or not they can actually push up and get over that 5,800. If so, I think we'd be looking a little bit better for the bulls to be able to trade up higher and potentially maybe into the body of that previous week, maybe up into 58, 40, 35 area. Yeah, 31, maybe back up into the weekly highs from the 23rd. Now, we have been watching, of course, this overbought reading on our Hello Momo on the weekly, starting to finally see some weakness in this coming in a little bit, and we'll take a look at where the daily's sitting in a moment. But either way, interesting to see. We'll continue to monitor this. We've seen this happen before, though, where it starts to turn we start to show some weakness, especially being overbought, but then it just ends up staying up here and turning back green. So that's certainly another potentiality. I personally, to really see that next move to the upside, really wouldn't mind to come back into 5,700 or even a little bit lower and kind of reset this to kind of recalibrate us so we can in fact go up higher, because it definitely is certainly a little hot up here. And as a matter of fact, since it is a new month, why don't we just really quickly take a look at what the monthly chart looked like here and what we got for that. Oh, wow, that's something. Well, this looks pretty ugly here. I mean, this is just, we didn't do anything here. Oh, I'm sorry, that's November. This isn't good, I would have to say, as far as a monthly view here. Coming up, unable to accept these highs, now closing back underneath this level. We'll have to see about that 5,800 again here, because we're going to have to consider this potentially now having created overhead inventory, excess supply here, all up in this area, right? So can they get over that? We'll have to see and start to work out some of this trapped inventory. So this is interesting. I'm not a fan of this candle. Let's see what happens if they can actually close the month above 5,800. I think that will be the tell whether or not. And certainly, we'll see. We'll check back after 2 weeks. We'll see if we get 2 weekly closes over 5,800. Then I think we're working through some of that overhead inventory. But it's a little dicey. It doesn't look the best to me. However, and also have to point out, we're still monitoring this overbought here on our Momo on the monthly. Eventually this is going to crack, and when it does, we'll have a real, the pullback will be pretty good. Again, timing something like that is nearly impossible. Personally, I think it's going to be after the new year. We'll start to see a nice retrace overall. But first, let's go over 6,000. All right, let's break it down here to the daily chart for us. And we'll also, of course, get into the other charts that we have been working with already. Now the daily is certainly turning out looking a bit worrisome here. And again, really from it's the same scenario here. Now look at this down day that we had. It bounced back up, 5,800 basically perfectly rejected there. We are now trading pretty firmly below the daily 9, 20, and 50. So that is something to consider here. They have not crossed over yet, but you could certainly say a break in the trend and in the structure overall. Let's see, the 9 and 20 probably going to start to creep down a little bit lower. Anything, and look at we basically did that 50% retracement, maybe a little bit more of Friday's range. Maybe it was about a 65% retracement there on Friday, so to be expected, but still not doing what they need to do. Let's see, over 5,800. Would have to say that if we continue to kind of consolidate like this, we have to consider that just setting up kind of in a big old bear flag for that potential move down. So we have to watch that very carefully under that 57.20 half, 57.20. We already talked about this. You can see this prior balance zone right here, these highs. So, and you can see right here, these lows right up in this area, right up in this area here. So if we start to really get under 57.20, I think we'll probably see a much deeper sell, maybe down another 50 points or so, coming down into that 56.70 like we were talking about earlier from the weekly view. All right, let's look at the daily chart that we already had built up for us. Here, let me extend this a little bit, and go a little bit more. let's extend this one too. Okay. All right. So I know we're talking about 5,800, but really we do have the daily highs from the 7th, from October 8th, 9th. We're still going to be watching. 5,800 certainly will open the door, but I gotta say 5810 is really gonna what they're gonna have to get over and really accept. I mean, even look here how we popped up to 5822 multiple times here. 58, yeah, I mean basically 5820s, right? So even if we got up to 5810, maybe about 10 points thereabouts that you could work with here. And since we did have so many hits here, I mean, here was our week high, but as a matter of fact, really I should just create this as a, let me take this off. Boom, we'll just have that there at that 50, 58, 20, 22. And it's also the low here from the 24th. So, okay. So let's see. I think that here, if we continue to see under 57.70, 57.80, we could also look at the highs from October 2nd and 3rd. As long as we stay under that, that's going to be pretty much that bear flag consolidation that we were talking about. Start seeing daily acceptance underneath 57, 40, 40, 44. Then we'll look to go ahead and attack down these prior weekly lows. Very key area here at that 57.20. So and we're almost there. So let's see. That's going to be the huge area where they've got to defend all the way from there to 57.08. That area we were already talking about from the weekly, and we've got that 5,700, of course, right under, which we already had mentioned as well. So let's see what we get. If we really start to see that acceptance over, I think 57.70. This actually is, I think, a little bit off. Yeah, 57.80, we can say. Getting over that, we'll look to attack up higher to the 5,800, 58.07, 58.20s. Underneath, stay underneath, and we'll look still for those 40s to be attacked. We closed right at 57.60, so about 20 points lower. Go ahead and see what they are made out of, and then again under that we get into a very dicey area where the bulls really need to step in right around the 57.20s and 08. So let's see there what happens. All right, let's take a look at some day trading levels now for ES. Not really seeing any, certainly obviously downward strength here, but we're not anywhere near the overbought or oversold, so nothing really to pay attention to as far as that is concerned. All right, let's get a little bit more granular here and get into, and really the day trading levels have not changed because we're just right back in the area we were, so. Okay. All right, so let's see. Still below hourly, 9 and 20, starting to cross over a little bit. Certainly still looks like a bear flag, and but they can still push us back up to retest 57.77, that 80 area once again. No question that we have that level here on our day trading chart as well as our daily chart, so that is interesting to be cognizant of. So even if we trade up, which you can obviously see the rejection here, we're still vulnerable. We can come down, maybe we'll match the lows, maybe they do buy it up there at that 57.60, but as long as we really stay, I mean, just pay attention to that hourly 9 and 20, under 57.70, it's not looking too good. Plenty of room here on ES as well to sell. We're not even nearly overbought or oversold, so plenty of room here on the hourly for further downside, but we're gonna have to pay attention. 57, 55, if that starts to break, and certainly if 50 breaks, we'll go ahead and start to look to attack the Friday lows once again in the 57.40s, and the low was 32. So we'll have to see if they want to come in and sweep that. I think, well, it's only about 4 points, 4 or 5 points, but certainly underneath that 57.40, we'll probably head for that 32. And then under that, oh, that's where we really get to the danger level we were just looking at on the daily, the 57.20s. If we break under that, it's not going to be good. So let's see what happens. I think more than likely, obviously with FOMC, we're probably just going to stay in a holding pattern. I wouldn't be shocked to see a range. Maybe we get up a little bit higher. And that still wouldn't surprise me either. I mean, did we get Thursday? We didn't even get the half. I'm wondering if Monday and Tuesday, we potentially, I'm going to see if we trade back up, because about 58, basically back in those 58.20s, that's about half, 50% retracement of Thursday's range. So that would make sense to me. But I wouldn't be personally looking to just buy it right here. If you're looking for a stronger confirmation, I would wait to see about 57.80 holding. All right, let's get firmly under those shorter term hourly moving averages, and then we can talk about coming up. I mean, even if we do accept over 57.80, it's still to 91 area right here. That's a decent trade. That's not bad. And certainly if we get over, then we'll look to attack 5800, 5807. I don't see why we wouldn't see something like this. Maybe it curl back up and kind of give us a bit of a DTR here. So let's see if this in fact happens. Now again, at this 57.90, could see some issues here. So even if we do start to change the curve of the market, we could come in here and then also collapse as well. Something to consider there too. All right, let's keep it moving along here. Yes, again, same old level, so we should be pretty familiar with those. Let's take a look at the NASDAQ 100 here and see what we can take away. Let's start off with the monthly. Now, just looking at the monthly, I'd have to say it's a bit better looking than, minus these horrendous wicks. It is looking a little bit better than tech. Very similar situation here for October. And you can see, we've talked about this level before, this area of supply. This month just came right up into it, basically perfectly at our halfway, and just boom, down. So there's still an issue here. Let's take off some of these drawings since we're starting with the blank chart. You can certainly, very spicy, but could you even say something like that setting up? Maybe. However, even though this chart is looking a little bit better, we do have that same situation here. This failure to push up higher, now twice, really affirming this overhead supply here. And of course, we're looking at a monthly, so it's going to be even bigger, but people are trapped here, and when we're coming into it, they're selling it. So let's keep an eye on whether or not they can actually, and I'm going to be looking at the month. What is June monthly high? It's going to be 20K 400. I think we start to get over that. Let's see if we can get a 2-week close over the June high. Start to feel a little bit better. Certainly if we got a monthly close, that would be great for the bulls. Still watching though, some weakness finally coming in here on our monthly. Overbought, oversold, so have to pay attention to that as well. You could see, oh, let's get into the weekly now. All right, basically stopping at the same spot as the S, right into the weekly 9. And overall, although now of course we are looking at a weekly chart, right, really we haven't done anything. It's still balancing. You know, trapping both. Here, trapped this wick here, trapped here the sellers, and trapping buyers, just balancing overall. So of course, I mean, it's certainly obviously tradable, 700 points, if not more. It is more. But overall, that's really what's happening. And we're not going to see anything bigger until we break out of it. And again, as I mentioned, that big concern is now we have trapped inventory here, and we still have trapped inventory over here as well, and as we've been pointing out. So I really wouldn't even mind to come back in to the weekly 20. Let us reset, give us a nice springboard from there to make that final push. Certainly over the swing high from the week of June 8th. I remember that rally coming into 4th of July. It just kept going and going and going. I think we could see 21,500, maybe even 22,000. I would have to say, if we get a nice reset. All right, let's take a look here, and we can certainly map out our weekly range as well. Boom. Boom. Okay, bring this one just a little bit lower. There we go. All right, so there's your bigger picture of weekly balance, right? And actually this probably... and it's all the way down, 20K, 700 points basically. 20K to 2,000 or 800, right? So I don't think that we're going to really see that move until something happens here on the weekly one way or another. Certainly tradable. Let's see, again, we're talking about the 400. We need over 400 for me to be able to attack up towards the upper part of the balance. All right, anything under from the weekly view, we're still vulnerable. Still vulnerable. I would also, it's not marked off here. We've got 400, but also watch the weekly lows from July 8th as well. That's around 300. So 300 to 400, there's about a 400 point weekly in the supply area that for me is going to be really the pivot where you can really start to get, and of course, obviously intraday, there's going to be bull trades to be had. But just from the weekly view, as long as we stay, I'm trying to mark it out here. Oh, there we go. My mouse is just deciding randomly when it wants to work and not, but whatever. All right. So as long as from that weekly view, we still hang out like that, right? What are we just creating? And that's about that 50% of last week's range, right? And look at this, the high, the low, I mean, a lot of manipulation going on here. But as long as we stay under 400, under 300 from the weekly view, have to consider that bearish consolidation for me. Yes, we still have got the weekly 20 here, the weekly 9 hanging out. That's bullish, sure. And I definitely am of the camp, as we were talking about earlier, about those retracements. I wouldn't be surprised to see Monday or Tuesday be up, and then we look for some chop into Wednesday And of course, Thursday morning will be probably pretty choppy until FOMC for the indexes. But let's see if we get any moves. Where did we close? We basically closed at 170. So, I mean, it's not crazy to, I was going to even say 250. Weekly low of the week of the 14th, it's about 200. That's only 30 points away. So that's not that big of a stretch to see that. And that's about 25%. Well, it's not, I think we can potentially see, let's go into the daily here. Why wouldn't we come and back test here? We're coming up on the daily chart. Why wouldn't we actually, I mean, we tried, but why wouldn't we come and back test the weekly 9 and 20? They're getting real close together as well, about 30 points apart, sitting around 355 and 330 respectively. So let's see. I'm going to look, and of course we're going to get into the day trading levels here in a moment, but we closed right here. I think it's going to be very telling if we can stay above the weekly open. Of course, let's see what happens in Globex on Sunday, but I'll be looking to see staying above that close at 170. Then we can try to see about working back up into the highs from Friday. You can see though they tried and smacked back down. So at least they put in a good effort at 20K, and they continued to hold it on Friday as well. What was the low? They got about 17 points away, so pretty close. Back to 20K being defended is, again, certainly building up some power there. I will say, though, if we really do start to see, say, a 30-minute close under that 20K, watch for these wicks here. I wouldn't be surprised if we see some nice pushes a little bit lower, and we kind of trade back in this high traffic manipulation area. And down here, anywhere from 19,940, I mean potentially all the way down to 19,800. So I'll be watching for that if we do start to really accept underneath 20K. And just look at the lows if you want to kind of get an idea. Just look at the lows there from the 8th of October, the start of the month, the 4th, the 3rd, and the 1st there. So let's get over to the chart on the daily that we have kind of been working with overall. Okay, so towards the end of the month, they really tried, and once they had lost, they really tried to get to that 800. I mean, did we tap it? Oh, 790. But once we broke under that 550, it was no good. I mean, they really didn't even give you any time to do anything. Under 400, it just collapsed. Let's get this one up. Okay. If we hold, all right, we're talking about the close from Friday, 170, but I'll give the bulls the benefit of the doubt, and I'll say 120. We can still continue to hold over that 120, then I'm going to continue to probably look for some type of that retracement further back into the 300s, maybe the high 200s. But overall, as I mentioned, we just have to watch out for this to form and set us up for that move down. Right, everything rests on 20K. Under, again, we come back into those early October lows. So the low 800s, and maybe we get down to 7. Maybe we get down to the whole number at 19,800. I'll pay attention to that as well. But it's anybody's guess here. Worst case scenario, I mean, it's 200 points, so it is tradable. I wouldn't hate that, but we certainly have. I mean, Thursday range, we did already about 50% of the retracement, and it got hit back. You gotta just be cautious here. Oop. This wick. Clearly a seller zone. And of course, we're looking at the daily, so. But it is, that 180 all the way to 300. Yes. Ranges are kind of wide. The other thing, of course, and I forgot to mention, we have the elections, which is probably also going to make Tuesday a miserable day to trade. Although Globex will be pretty fun. There's a chance that I will be online for some of that, trading the markets live. So come check us out on Twitter if we go ahead and do that. Let's get into some day trading levels here. I updated them for NQ. So let's see what we got. All right, so here's that low, that huge down candle from Thursday. Oof, this looks painful. Right into 150, right? And now we're on the 30-minute here, not on the hourly. Just check. Oh, okay. Look at this. NQ, a little bit of a firmer close under those hourly moving averages, so I think it looks a little bit better. I remember ES being a weaker market on Friday. Looking like a bit of a base here. Some traps and manipulation, of course, right under, but I will say stay over 150, and we can look for about 50 points, right? See if we can get back up into 200. 200 is going to be the main spot, right? We can see right here, whole number, 10 o'clock, retrace there. You can see here, boom, boom, boom. Here you could even give it about 10, 15 more points. It's impossible to say exactly, obviously. The number you can see here at 2 o'clock, we popped up. 200 is the line in the sand. Yes, it's a little bit more risky if you want to play off the 150 lows or the 150 level. However, if you want a little bit more of that confirmation, I think a firm acceptance, whatever your operating time frame is. Remember, of course, the shorter the time frame, the less accurate the acceptance. But if we certainly see a 30-minute hourly, which can still fake out, but if we see a 30-minute or an hourly close over that 200, well, then we'll look to see if we can attack up 60 points more. Maybe we get a little bit higher. You can see here at 11 and 11:30, we did a little look aboves and then fails on Friday session. But back over the 200, then we can go ahead and look to attack up in the 60s. If we start to really see, and so you can obviously see the fake outs here on the 30-minute, let's look to see an hourly close over 260. Have to be a little bit cautious. Look at the 430 lows here, right around, where is this, 288, and that's pretty much where we topped out on Friday. The lows here from 230. So if you want, you can throw that up as well. Wouldn't be bad to have on there to see if we can trade up into there. If you're looking on the short side to go with the overall trend, certainly a zone to consider a short if we do see trading back up into here or exiting longs. Then look to see if we trade back into the 200 area as well. So that is definitely a possibility. We could throw out some of the other indicators, and I will take a look at those in a moment just to see, but I'm sure pretty much most of them are all looking like there's a lot of supply overhead from the big move down. And we were mentioning that NQ kind of was that stronger market on Friday. It did complete for me the 50% retracement where ES did not. You can see here that's about of this big move down. That's about 50% there, right from here, from the swing high to the swing high. So NQ did it, but ES was unable to, which was interesting because ES was really the stronger market, as we've talked about that divergence at length overall, and now seeing a little bit of a shift. But we'll see how that pairing works out. Pay attention though, again, as I mentioned, elections and the FOMC. This is like the America's, rocks like Super Bowl here. What is the Fed going to do? Hopefully they pause and wait to see. But we can also just have to be careful. Do we get trapped between 150 and 260, 280? I mean, it's tradable, but we have to be also just aware of that. We can just stay trapped within this area until after FOMC. Or who knows what's going to happen after the election. We could tank another 200 points or rip up another 200 points. So that will be interesting as well. A lot of fun stuff. 2, 3. Ugh. And stressful. All right. If we really see that acceptance over 300, 290, looking at 345, thereabouts, over that 345. And we can look to see about 400, 420. And I just wanted to see something. Okay, that's fine. Around that 400, 422, interesting short zone as well. Now with the 200 on that 30-minute coming down into that area with that potential double top. This will probably start to slope down a little bit more and get underneath though, but certainly a slower moving given the length. All right, let's take a look at some of our other charts here and take a look at the Dixie, see what that is doing. Now we've been talking for at least a couple of weeks. We were looking for that bounce on the dollar, and I did think it was going to pull back, and it just kept on going. After we did see this huge bounce, it really never gave any type of real pullback, and I think we were talking around this 103.40 that we would see something down and then back up, but it just kept on moving. So this is certainly interesting here, and it looks to me, now we do have a bit of a divergence here, right? We've got overbought and coming down with this moving up. I don't know, we could call this a flag for sure. But do I trust it? With the divergence, not so sure. High traffic area here, you can see we've rejected in this 104.75 area quite a bit. Interesting here though, getting under the daily 200, starting to cross under the 9. Let's take a look at the weekly. Right off that weekly 200, right into our midway. Plenty of room on the weekly for the upside. Ooh. And ooh. Well, look at that. Over the 9 and 20 here on the monthly. Stay over 103.50. And it doesn't seem like there's no reason why we're going to not see 106 again. 106.50. So that is my thoughts on the dollar. Looks like it wants to go up higher. Now, of course, the real test will be what happens when we get into that area here. We do still have over 10, 107, 40, 45, all this area here could still reject. And, oh, let's see about our bonds. Still just getting the crap after that rally. TNX, they just think they're going to drop more rates, and TNX is just flying, and this is getting decimated. Now below monthly POC, below 91, and this was another one where I thought we'd get a little bit of a retrace, and then it would set up for another short, but it just kept selling. Now firmly, like I said, below VPOC here, below 91. I mean, below 91.80. I would look for TLTs, probably coming into 90 to 88, 40s again. Oof. So it did give us a little bit here on the weekly. I was looking, remember I said 96, and we went to 95.62. Pretty close. Firmly now, 9 and 20 crossing. As long as it stays now, even under the weekly 93.80, I still will probably match the lows from the week of the 27th. Real close again to that 88.50 area. We'll probably have a little bit of a bounce, but we'll see what the Fed does. But as it stands, it looks like 30-year will be dying. Oof, and TNX here firmly above this supply, just continuing to move up higher. Let's get to the other chart though. Here we go. Let's see what happens. We're on this 43.5, 44.32. I think that this is probably, look at the highs here from October 17th of actually 3 years ago. I would say, where is that? 43. We could see it pull back about 60 cents, maybe to a 43. $42.90, and then continue. I could see it having some issues up here and stagnating a little bit. Kind of getting extended from that 9 and 20 on the weekly. Yeah, look at where this is and where the 20 is. I'm gonna say that the bond's probably gonna be bouncing. This has gotta catch up. But as long as it stay under 42, stay over 42, 40, 41.85, there's really no reason why this is gonna die significantly. What we may end up just seeing, especially after such a run, is just maybe to see if we can build up some power here sideways, and then we make a break and head up for that 44.30s and see what happens. Certainly will shift the market structure if we break over and really hold, then we'll come back, retest. So say we come up here, come back up, this is the shift, and then from there continue, maybe to 45, 4.5 on the yield. All right. And the yield curve still over 0, but slowing down in the steepening. Let's see what happens if VIX one day gets over 15. I think this is going to remain elevated this week from the uncertainty from the election. So also keep that in mind. So your options contracts are going to be more expensive still. All right, now the 50, the SPX 50R. I'm not convinced here that this is a true break of that 50%. I think this is going to come back over 50%, but let's be cognizant and let's watch, because that's where we start to get a little bit cautious if we see under 50% reading for how many stocks are trading over that 50 SMA. I think they're going to bounce back over. We're only at 48% coming up, but there is that chance that we see a 50 reading, and then this just does this. And of course, a lot of these things, I'm just calling it out, all things being equal. It's just so many canaries in the coal mine with the election and FOMC this week, so take it with a grain of salt. Certainly in a spot where it looks like it's could come up and curl for us. Same with the 200 as well. New highs versus new lows. Oh, just below 0, but not, again, non-committal, -8. So as long as this holds over 0, really not an issue, but we're watching this downtrend for this weakness overall. That probably will pop back over 0. High yield bonds, nobody interested. Mapped out the supply, still selling, watching that downtrend. So let's see here. I'm going to create another little downtrend for us there to watch. So it looks like no one wants to do with the junk bonds anymore, at least for right now. See what happens when they get into 78.5. They don't want this because of the yields. Let's just look at the VIX. Back above 20. Oops. All right, so we did get a little fake break here. We've been watching that 19, right? That was the key. You saw here we held 19, back over 20, gapped up right from Thursday, and pretty much getting stuffed again at these highs from back in October. As long as we hold over 20 and 19, I don't really see any issue here. It's still probably going to remain elevated. I guess I would watch 21, start to get under 21, probably could cool off to 20, and then see under 20 back down to 19. Otherwise, just watch here. We could just sideways and then break up over that prior swing high of the 8th and come back up into 24, maybe kiss 25. Call put ratio, nothing really too extreme, but starting to perk up a little bit. So we'll pay attention to that. See if we get any contrarian readings. And what's going on here? So again, bonds, nobody wants it. Still moving up, higher lows here on our ratio. This is obviously this is showing us TNX continuing. Let's get another. Trend here going. So this is clearly above the 50 here. As long as this stays over 1, TNX will continue to rise. TLT here though on the daily, starting to flash a little overbought. Kind of telling me again we might get a little bit of that daily higher, lower high. But as I said, staying under 92. It's going to continue to go down. Let's take a look at the Dow. Hey, look at this. For once, transports is actually holding up better than the Dow. And the Dow is just basically back into this prior balance zone here. So it's about a 200 and what is this? It's certainly tradable, but unless bulls on the Dow can get back over 42,300, it's going to be tough. Over 42,300, then we've got room to come back up maybe to the 625, 640 area. 550. Look to the highs of the end of October, the 29th, 30th. I think we would trade back up in that area. Maybe we could wake up to the highs from the 29th. What is this? No, the 27th of September. But I think we only would really do that if we start to take out the highs from the 30th and the 20th. So that's over 42,475. Then maybe we can look for those 500 and mid 600s. Transports, though, still holding here pretty nicely over our balance range break. Underneath 16,300, I would watch for that downside. Probably 16,100. Could drop about 200 points there. Coming back into that daily value area highs, that wouldn't surprise me. Under that 1645, probably look for 1600 flat. And I think that is it for all of our charts. And it is. All right, so really an interesting week ahead. Again, be careful. Election, FOMC. Not a time to be swinging for the fences, so stay tactical, trade less. And I really appreciate everybody taking the time to prepare for the upcoming week with me. Remember what we say at the end of every video. A prepared trader is a profitable trader. So congrats to you for taking the time to prep and get ready for the week ahead. Let's plan our trades and trade our plans. Thank you again so much for joining. Really appreciate it. Take care and have a great rest of your weekend.